Well, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, and with me today is Andrew Moss, or Andy Moss, as many of you may know him. Thanks, Andy, for joining me for today.
Hey, thanks for having me, Greta. Glad to be here.
All right, so you've been on Conversations with a Pro Trader before. Welcome back. Just give everyone a quick introduction of yourself as a trader, just in case someone may be new here and doesn't know you from the last time.
Okay, very shortly or briefly, I'm was an advisor and senior PM with Morgan Stanley for about 20 years, and now I've been with T3 Trading Group for almost three. So a little shift of gears there in the last few years, and here I am.
All right. I don't know if we covered this last time, so let's talk about it now before we get into kind of current action. How did you find T3 Trading Group?
It started. The first thing I ever found, of course, was Scott Redler on Twitter.
Hmm. Okay.
Um, as I was coming into transitioning from being just an advisor into a portfolio manager, um, you know, learning to take the reins and manage the money more than just prescribing firm blessed portfolios. Started getting active and reading more, learning more about how a trader's mind works, trying to learn to put together the near term pieces with the longer term buy and hold pieces and all of that kind of stuff. And Scott was one of the first people I found on Twitter, and that led to T3. And then I got to know Derek a little bit, Derek
Hmm.
Oldensmith,
Hmm.
and actually had been following and keeping up with those guys in the company for many years before I made the change. So when the opportunity came up to switch, it was a no-brainer. I knew exactly where I wanted to go and who I needed to talk to, and
Hmm.
that's how I got here.
And how has joining T3 Trading Group versus what you were doing before, how has it changed, impacted your trading, changed your trading, etc.?
Well, the change and the impact has been um, I can't really overstate that. It's been such a difference in what I'm doing now versus what I was doing before. The
Hmm.
time frames are completely different. Working on a much shorter time frame a lot of the time. Working with one company and a group of really fantastic traders versus trying to manage a book of clients and the planning and all of the challenges that go along with that. So that's been a huge change, even though it's all still Wall Street investments trading related. On the surface, it's been a really a completely new experience for me.
Hmm. All right. So let's get into your current trading. How would you grade your week of trading so far? We're halfway through. So give me the grade on your typical school scale, an A to an F, and why.
Um, I'm probably a solid B.
Okay.
It's been, and I was thinking about this earlier, and it probably sounds like a cop out, but it's just not been a really remarkable. It's been a good week, not a
Hmm.
fantastic week with the market kind of chopping around a little bit, but
Hmm.
could be better, but decent.
All right. So for everyone who's here with us live, just a reminder, this is a conversation between Andy and myself, but also you guys and Andy. I have put a comment in the live chat for you to submit so you can see where it's at. Submit your questions there, and we'll get to all of those in the second half of this event. So we just want to let some of those pile up. Start submitting them as soon as they come to mind. Okay, so Andy, this is the final week of September, and so far it has lived up to its reputation as being the worst month for stocks. How has September been for you as a trader personally?
It's been a good month.
Okay.
It's been again kind of like my week to date so far. It's not earth shattering, but it's been solid. It's looking back over the last 2 or 3 months. Um, September for me has been better than August. July was really good. And if you just correlate this with the chart of the S&P, it's
Hmm.
pretty easy. July was very active. There was a lot going on. The market was trending higher pretty strongly, and almost not quite on August 1st, but pretty close to that. Um, it kind of reversed course and started selling off, And even that was pretty short lived as we put in a near term bottom there in August 18th. So those turns can be challenging to keep up with.
Mm-hmm.
Um, and they create a lot of opportunity, but they also mean you have to be, right on top of things and able to shift gears very quickly when those pivot levels come in. So August went back up and closed not quite where it started. And then September, this was kind of on the calendar. Friday, September the 1st was the last high that we see on the chart there, and stocks have been mostly lower
Mm-hmm.
and accelerating that lower move here over the last 5 or 10 days. So directional moves like that are really, I'm a prefer to be a swing trader, a day
Mm-hmm.
trade and take shorter term trades when market dictates, like it's doing now. And so it's been okay, and better than August. So I'm happy for that.
That's good. All right. So when it comes to a down month like we're having in September, and it's definitely kind of intensified in the last 10 days, as you said, what changes do you make to your strategy when it comes to maybe shifting from a more long side focus to a more short side focus? What have you been doing this month that's been working for you?
Well, back to your earlier question about how this is different from my previous job.
Mm-hmm.
I never went short for a client. That was
Mm,
that's just not the kind of thing that we did, and that's been a nice tactic to add to the portfolio here is taking short positions, being able to play directional moves both ways, and certainly been more focused on that this month. Maybe not as much as you might think, because
mm,
up until again, just referencing an SPY chart, if anybody's got that pulled up, that really kind of cascading down day last Wednesday, the 20th. Before that, it was pretty choppy, so it wasn't.
mm-hmm,
The overall approach has continued to be less is more. It's just you only
mm,
take the best setups. You trade smaller size with fewer positions. You probably look for, or I've been looking. You take profits a little quicker and just keep everything on a little bit shorter leash.
mm. So you say, you look for the best setups. What are, for you personally, the setups that you're looking for on a stock?
Um, it's been really very basic recently. We
Mm-hmm,
don't need a lot of fancy indicators, or we're looking at pivot levels and moving averages for potential support and resistance.
mm-hmm,
And so when stocks come into those, or indices, ETFs, whatever we're trading, it can be as simple as finding a bounce from a level. Like yesterday on QQQ, the pivot low from August was 354.71. We've had our eyes on that for 2 weeks, probably looking at it. If we're going lower, this is probably a spot we want to pay attention to. And as we
mm,
did that yesterday, we got a quick bounce of a point or two. It's you're not going to retire on it, but those are the kinds of quick cash flow trades that that help pay the bills in times when the market's choppy like this.
hmm. So it's been a quieter week of economic data and events so far, but some key things are still to come. Fed Chair Jerome Powell is scheduled to speak at 4 p.m. Eastern Time tomorrow. So that's kind of the first big thing so far this week, except for some of the housing stuff that came out. What are your expectations for that speech, and what do you expect might happen with the market Friday morning after Powell speaks tomorrow?
That's a great question, and I'll tell you right up front, those types of things are not my area of expertise. If it's on the chart, it
Mm,
catches my focus and what I'm
mm-hmm,
really interested in. Fortunately, um, I work with a lot of really smart people who have a
mm-hmm,
lot of other strengths inside, but outside the charts as well. So talking with David Prince and Rick and Kira in the inner circle, we cover these things extensively throughout the day and weeks
mm-hmm.
in preparation for all this. And our opinion is kind of that it's going to be really pretty similar to the FOMC meeting the other day.
Mm,
Al's going to come out and say probably something along the lines of, "We don't know if we're done raising rates. We're going to be data dependent. We're going to see what the numbers show, and if
mm-hmm,
we have to keep raising rates, we will. If they tell us we can slack off, we can do that as well. So I don't think we're going to get a whole lot of guidance, and possibly that translates into no major surprise for the market.
Mm-hmm. Yeah. How do you typically position yourself heading into events like a big Fed speech, for example, or last week's Fed meeting, other binary events like that?
Well, this is all the same approach. Usually, if it's all of these things can be looked at as a coin flip, and
Mm-hmm.
the approach is always very similar. You're going to lighten up positions if the outcome is completely uncertain, and you don't feel like you have an edge one way or the other. It only makes sense to be a little smaller going in, and that means smaller within the context of holding things that you have a profit cushion in already, right?
Mm-hmm.
So you're going to hold things that if it goes against you, you're not giving up too much gains, and certainly not going into a loss scenario.
Mm-hmm.
Something else I do a lot is use options to limit that risk. We'll play weekly or monthly options on certain stocks or ETFs, and that way, your risk is premium paid, and so you can still have a position to participate if it works in your
Mm-hmm.
favor. If you have an idea which way things might go, but you're not subject to a huge gap down or some other kind of unexpected event that could leave you taking a big loss.
Hmm. So on your positions disclosure, we can all see that you are long the cues. So explain your rationale behind that trade, why you're holding it, heading, or why you're swinging it overnight. I don't know when you
Mhm.
opened it exactly, but what did you see on the chart of the cues that said, okay, I should go long?
This comes back to less is more. It's you don't need to buy 8 or 10 different stocks when you
Mm-hmm.
can get a similar effect buying the Qs right now. There are times
Mm-hmm.
that we want to be in those different names, and right now it's just it's this is part of the less is more approach. We can own one ticker or 2 or 3 tickers and not have so much to keep track of and not have so much risk on the table. The Like I mentioned a few minutes ago, the 354.71 level yesterday was something that was on the radar for many days before we got there. So that was a quick bounce trade that presented itself, and you get into that. And then today, the move this morning still had some Q left from yesterday, and was actually in and out of it a couple of times today because we got a chance that the gap up open this morning. We could
Mm-hmm.
lighten up or even get flat like I did, and then it started going down, and then late in the afternoon, uh, there was another opportunity there to start. Okay, we're going to buy this a little lower, and that's a good example of holding things with a profit cushion. If you
Mm-hmm.
bought that dip and you take some profit along the way, then it's okay to hold a little bit and see if we get some follow through tomorrow. And the reason I'm that is because of the two big hammer candles on charts of the SPY and QQQ. Doesn't mean we're going up tomorrow, but that's one of the setups that I like to look for. Our SI is a little washed out, down near 30 on SP, not quite that low on the Qs. We're down below the Bollinger Band and some support layer, and so that's a reversal trade that I look for over and over again. And
Mm-hmm.
if you time it well and can get in and book a little profit, then it makes sense to hold that on for the next day and see if you get a kind of a day two there.
All right. So next on the schedule after the Fed chair tomorrow is the Fed's preferred inflation gauge Friday morning, the core PCE price index. This release typically gets a more muted response from the market than, say, the consumer price index, CPI. But this is the first piece of inflation data after last week's Fed decision. So, do you see that response from the market maybe being a little different this week coming off of the Fed decision last week?
It's hard to say. I don't think it's going to have a huge effect. When we look at this, again, relying on the knowledge and expertise of my friends and coworkers here,
Mm-hmm.
um, we're looking at travel, we're looking at housing, we're looking at cars, we're looking at a potential spending slowdown in a lot of those areas,
Mm-hmm.
and so maybe inflation in this measure comes in a little lighter than expected. That could go, again, binary event. If it comes in a little lighter and people like the number, we're kind of poised for a short-term bounce here, so
Hmm.
that could play into things here pretty well. If it's a little hot and spooks folks, um, it's right back to selling. So that's that's not really much of an answer, as I tell you. In my opinion, it's a coin flip. It's just it's
Yeah.
kind of the same thing. So I don't know which way it's going to go, and I'll be positioned accordingly.
So, how would you describe the current market action and sentiment among traders?
Sentiment's an interesting topic because even though we've been selling off, we're not quite 10%, or maybe we hit that level today. Um, there's not been panic. It's we haven't seen any of those big crescendo down days. Any of
Hmm.
that, and pardon me as I look away here, I'm just taking a quick measure at the lows today. Um, Q's hit down 9.44% from the recent high. So, or from the July high. So we're almost at that. People get wrapped up in the textbook definition of a correction, a down 10% move. I
Hmm.
don't think it matters, that much whether we hit exactly 10% down or not. But it's been pretty orderly. There's not been a lot of panic. People, when you
Hmm.
talk to folks, they don't seem too concerned. There's not been any huge spike in the VIX. I mean, the VIX has been under 20 this whole move, which is maybe a little surprising. I'm not an expert in the volatility, but again, just watching the charts, it seems like if people were really scared, we would have had a corresponding jump in the VIX index there. So sentiment is just, I don't know if complacent's the right word, but it's been an interesting thing to observe. Is it doesn't seem to be very heavy one way or the other. The
Hmm.
action, again, until just this last handful of days, has just been pretty choppy. We were
Right.
within that in a range on SPY and Q there for 2 weeks or more of just kind of bouncing back and forth on either side of a box. And we finally got some resolution there and have been moving lower. And so that's a little bit of follow through, but not the follow through that the Bulls want, but maybe closer to, you know, like we got today. We got a nice intraday reversal. Maybe we've hit that level where buying comes in, and we get a little bit of a bounce here.
So, you are not just a professional trader with T3 Trading Group, you're also a chartered market technician. What does that designation bring to your trading that may be different from other traders?
Um, it's probably going to boil down to just more knowledge of charts and charting
Hmm.
indicators, and kind of intermarket analysis, looking at relative strength, putting all of these types of pieces together. The most that's all textbook knowledge that anybody can study and learn. The real benefit that comes along with this is being part of an amazing network of really incredibly smart traders, investors, analysts, portfolio managers, and just getting to meet and know other CMTs and other technical analysts that doing things differently than I am. There's a
Hmm.
lot of people out there doing some really fascinating work, and those things are all part of my approach.
Hmm. So, would you say your trading mostly just fully relies on the charts, the indicators, the technical analysis side of things, and not really any other, like, is that your main strategy when you're coming into a stock? Like you have when you're choosing a stock?
That's the
If that
that's been the
makes
bulk
sense.
of my focus. That's my specialty, and that's what I look at
Hmm.
primarily. But it doesn't make up the whole picture. The fundamental side of things. And I'm no expert at reading an earnings statement or a balance sheet. Um, I'm familiar with them. I glance at them, but I've always had the approach that I don't need to be an expert in everything. I just
Hmm.
need to know who the experts are, and so that's why
Hmm.
being part of a team has been really beneficial. Having guys like David, who he's got seemingly an instant read on an earnings report. This is good or bad. Here's what it means. Here's the potential implications and what we want to look for. And getting Rick and Kira's opinions on the kind of the macro events, the other um, factors that are coming into a play that aren't things that don't show up on the charts. And putting all that stuff together has been really a nice benefit to my trading. and something that I think you got to kind of have a well-rounded approach there. You can have a specialty and have a focus, and I think everybody should, but you need to also be aware of the things that you maybe aren't as good at, and but still need to know and
Hmm.
find ways to fill those spots.
Okay. So, what stocks or sectors overall would you say you're bullish on right now and why? If there's nothing in the short term, maybe more long term. If there's something in the short term, that as well.
That's a pretty easy answer for me right now. Again, citing the spies and cues with this hammer, potential hammer pattern, and a couple other indicators that signal potential for reversal here. That's going to be a key focus as we try to do less. But also the major names that make up those indices, the bigger cap names, the leaders. Your Apple, Microsoft, Nvidia, Amazon, those kind of names. That's where the
Hmm.
focus is going to be. If we're going to turn around and go higher, people are going to be buying these things. They're going to be buying the indices. They're going to be buying the bigger
Hmm.
names before they go to kind of the smaller stuff more than likely. So those will be I'm going to focus on the leaders, on the bigger names and the indices.
Okay, and then on the flip side of that, what would you say you're feeling more bearish about and why?
Small caps, the other end of the spectrum. You look at
Right.
IWM, you look at a lot of different names that were hot 6 months ago or 3 months ago, and these are things that, with the exception of cannabis, that's a different story here lately. But by and
Hmm.
large, the small caps have been the index is a choppy, messy nightmare of a situation. It doesn't look healthy, and so those are things that I'm just not gonna. Not that I'm overly bearish on anything. It's just those are not the ripest fruit right now, in my opinion.
Hmm. So you mentioned how kind of heading into or before kind of the last week, the market hasn't really had any direction, been kind of choppy. What do you see as the next big catalyst for the market, whether that be up or down? Or do you think we already got that with the Fed meeting last week?
Um, the Fed meetings behind us. We've got Jerome Powell speak. We're always waiting on the next biggest thing. Like it's always
Right.
the non-farm payrolls is the most important report ever. CPI is the most important inflation report ever. Fed Day, so on and so forth. We've been in this perpetual cycle of waiting on something to move the markets, and
Mm-hmm.
it always seems underwhelmed. So now the headline of the day is the government shutdown. Will they get a
Yeah.
deal struck? Will they, and that's kind of always the same situation of dragging it out until the 11th hour, and then some miracle happens and some hero arrives on scene and fixes the issue. I don't know if it's going to move markets. Looking at the history of government shutdowns and the negotiations leading up to that or saving that, it's really not have a huge impact on average for the markets. So I don't, maybe the seasonality patterns are the catalyst. Maybe we just have
Mm-hmm.
this has just been a period that we just have to get through, and whether it's self-fulfilling prophecy, seasonality happening because everybody's watching for seasonality to happen, or is there some underlying factor there? I don't know. It doesn't really matter.
Mm-hmm.
I'm going to be. I think the potential is there to set us up for a good end of year rally as we get back through or into the kind of the strongest period of the year. We've got October and excuse me, August, September, and October. Not typically real friendly to the bullish side of the market, and
Mm-hmm.
we're getting ready to clear part of that and go back into a more favorable time of the year. So then we take those 3 months and put them in this part of the presidential cycle. And I think that I don't know if that qualifies as a catalyst, but that's one of the outcomes that I'm looking for.
Mm-hmm. So the end of this week is not just the end of September, but it's also the end of the third quarter. I feel like every quarter this year on Wall Street has kind of had its own theme, its own story, its own little issue. The first quarter was kind of things were kind of sideways, a little bit choppy, not much direction. Second quarter, the big thing was the bank failures. Third quarter, it's kind of been focused on the Fed, interest rates higher for longer, etc. When you kind of zoom out and look back on 2023 as a whole so far, what's your take on how the markets performed this year?
Surprising.
Mm.
Um, looking at the where we were last year
Mm-hmm.
and the lows that we put in of October of last year, when everybody was really concerned. We had VIX at elevated levels. The sentiment was much different. And
Mm-hmm.
then, we kind of came back down and tested those lows again in December. And then Qs basically went straight up like 50% from,
Mm-hmm.
December to July. I don't think anybody expected 50% in 6 months. So
Mm-hmm.
that's been very surprising. I think that caught a lot of folks off guard. And that really doesn't matter. It's where we are now. We're looking at still trying to find a resolution. What's going to happen with rates? What's going to happen with inflation? We've got a lot of talk about this acceleration in interest rates, and that's a problem. I think that's going to be going to continue to have some negative effects. How the market doesn't mean the market can't go up. The stocks can go up when interest rates rise. It's happened before, but it's I think looking back to answer your question, it's a little surprising to see where we are at this point, and a little uncertain still about how we finish out the year. Seasonality says we should be strong. History suggests that we should have an end of year rally, and but it's really like any other time. There's about a million questions and reasons why stocks can't or won't go up, and that never changes. So that to me is, I want to be mindful of all those things, but only price pays, right? So I'm going to focus on the charts. I'm going to watch those levels. I'm going to take trades as they show up, and as we start to get some follow through in one direction or another, then maybe we get back to a situation where we don't have to be so less is more. We can do a little, do a little more, have a few more positions, maybe let things run a little further if they are given the opportunity to run a little further, and see what happens.
When you're in a time period where you're trading less, you said less is more in a time like now, excuse me. So you're not so actively trading throughout the day. What other things are you doing during the day to support your trading, support your strategy, your methods, all of that, if you're not actively in and out of stocks?
That's a great question, and a great point to make is doing nothing in trading can be a superpower sometimes.
Mm-hmm.
Just sitting on your hands, stepping away, finding other things to do rather than clicking the buy or sell button is, that's a strength and a talent that will has saved me a lot of money, learning how to do that. So things that I'm doing, just looking through the charts, looking through ideas, which that's a kind of a double-edged sword, because might be tempted to take trades that aren't really A+ setups. Might be tempted to, hey, this kind of looks okay, maybe I take a shot at it, which is not usually a good idea. So I try to stay away from the intraday charts as much and look at more daily and weekly charts, look at relative strength relationships, look at sentiment, look at and by sentiment I mean I should say breadth. I used the wrong word there. Looking at what is the percentage of S&Ps over their 50 and 200 days? Where are the bullish percent indices? All those kinds of things, and all that goes into writing a couple articles a week, writing my thoughts out, talking my thoughts out. Just really trying to stay on top of things and make sure that you have a good feel for what's happening, so that you can be ready when those trades do present.
We have an audience question from Pedro, and I'll answer part of it, and then you can answer the other part. So we asked if T3 Trading Group also takes futures traders, and the answer to that is yes. Pedro, yes, we do. But what other qualifications do you look for besides education? So instead of going through the qualifications to be a trader at T3 Trading Group, talk through your personal process in joining T3 Trading Group, the steps you had to take to be part of the team.
Okay. Good questions, Pedro. And there's certainly a lot of things you can be aware of. I think there's a good bit of that available on the website.
Yes.
Just to take you through my process. As I mentioned earlier in the call, or in the show, I was speaking with Derek Oldensmith. He's the senior trader over at the ProDesk virtual trading floor, and he's got. I guess he has a supervisory role there as a Class B. member and that kind of stuff. So the conversations were very similar to a job interview process. I mean,
Mm-hmm.
it was an interview process. We had several conversations. They're going to want to know about your trading strategy, your industry experience, your education. There's tests and licenses that have to be obtained, and all that kind of stuff. So it's not going to be, really very different than any kind of other job interview that you might be imagining.
Hmm. Were you already licensed pre-joining T3 Trading Group, or was that a process you had to go through
Uh,
in order to join?
Partially, yes. I've had my Series 7 and 66 since 2000.
Mm-hmm.
And I had to go take the Series 57 is
Mm-hmm.
the professional trader license. I had to do that and get
Yep.
that qualified before I could go active with the company.
Right. Okay. So that, Pedro, just to answer your question, is one big requirement to be part of T3 Trading Group is you do have to be a licensed professional trader. So that is part of the process of joining. If you're not already licensed, the company will have you go through that process in order to join. Okay, Andy, our next question is from Taff. I hope I'm saying that correctly. He asked, "Do you find your CMT designation slash knowledge more applicable in this trader role versus your prior financial advisor role, or the use case just differs?"
It's not more or less either way. It's very applicable in both instances, and I
Mm-hmm.
don't even really know that it's that different. The difference is in the time frame on which it's applied. I
Mm-hmm.
can and do use a much shorter time frame now as I did before, and so just to translate that into simple terms, I'm 2 minute, 30 minute, and 65 minute charts
Mm-hmm.
on intraday stuff versus looking at clients and financial planning and portfolio management. Probably rarely looking at less than a daily chart, and most often a weekly, because you're doing things very long term. So, but the knowledge is that's the great thing about trading and markets and technical analysis. It's all fractal.
Mm-hmm.
The same indicators can work, the same patterns can show up, the same types of events present and evolve over all those different time frames, and can all be part of the process.
Hmm. So I'll go back to some of my questions. When it comes to being a trader, so many big traders, we'll use Scott Redler for example, emphasize their daily routine as being such an important part of the trading process. So let's talk about your daily routine. What's your morning routine before the market opens? You're on the East Coast, so you're in line with the market hours, unlike myself on the West Coast. I got to get up early over here when it comes to the
Yeah.
market. But talk about your morning. What do you do before 9:30 a.m. Eastern every day?
That's a really good question, and Scott's very vocal with his routine. He's an animal with that, and got so many
Mm-hmm.
things he does and does them so well with such discipline. Um, I don't have an ice bath in the morning, but I do have a number of things that I've got to do every day just to get ready.
Mm-hmm.
And actually, I got this question on Twitter the other day, and I had the same response. So this is a great question, but probably a little too the answer's too long to type out here. So maybe I'll do an article on that for my page here coming pretty soon. But I'm up at 6 o'clock every day. Get a shower, get some coffee, maybe something to eat, and check the futures. And so all of that is coming along. Just trying to get awake, get geared up, get ready to go. You're letting the dog out and taking a walk and all those kinds of things. By 7 o'clock, I'm at my desk and I'm starting to go through the charts. I'm checking in with David and Rick and Kira and the rest of the folks in the Inner Circle VTF and seeing what are they looking at, what's the news, upgrades, downgrades, earnings, events, all that kind of stuff. As I'm going through my watch lists on the charts to see, okay, are there any setups that we really like? Is there anything changed overnight? Is a big gap up that lets us trim positions, or is there a big gap down? Is there, sometimes you'll see things that look really good at 5 o'clock or 4:30 the night before that are completely gone the next morning. So you just got to look for all those kinds of things. And then we have a morning call. David does a morning call every day at 8 a.m.
Mm-hmm.
and he goes through looking at kind of his view on the day. And he's always got some great information about who's reported earnings, who's their upgrades, downgrades, do they mean anything? Is it from a reputable firm, or is it kind of a smaller tier firm, maybe not going to have as much impact? And just really pinpointing and sharing those events that have potential to have impact on the day. Rick's going through some charts and sharing some of his observations, as is Kira and everybody in the room there. It's just, it's such a great team effort. There's
Mm-hmm.
different specialties on news and stalk halts and just different whatever's happening through the day. So you put all that together, and by 9 o'clock, we're dialed in. We've got to focus. Okay, here's the handful of things we're really looking at. Here's our targets. I don't mean price targets. I mean the trades or the setups that we really want to target for the first
Mm-hmm.
part of the day. And then 9:30 the bell rings and we're off and running and see what happens.
Hmm. And do you do a large majority of your trading at the open, or do you kind of spread things out throughout the day on a
It's
typical?
definitely more active through that first hour or so
Mm-hmm.
of the day. That's when things tend to move the most. 9:30 to 10:15.
Mm-hmm.
You're really gonna get a kind of get that morning rush out of
Mm-hmm.
the way, and then you can take a little bit of a step back and say, okay, we've had an initial thrust or an initial move or reversal. Now let's see if it's a nice gap up and go. Can it take a rest and then keep going, or is it going to reverse lower and kind of give back what's happened so far? All of those kinds of things is between 10:15 and about 11:30, and then from 11:30 to 1:30 or 2, maybe even 2:30, tends to be pretty slow as
Mm-hmm.
things just kind of flounder and flop around, and not a whole lot going on, relatively speaking, there before things kind of ramp back up again into the close.
Right. All right. So after the close, uh, in addition to morning routines being so important for traders, post close routines are also mostly,
Mm-hmm.
for most traders, very important as well. So talk about your time after the close. Are you, reviewing trades, looking back on your day, journaling? What are you doing to push yourself further as a trader after 4 p.m.?
Well, depending on where we are in earnings season and which companies are reporting,
Yeah,
sometimes we're still very active in trading a report after
very
the
true.
market closes.
Mm-hmm.
That happens a lot. It's not so much right now because we're kind of not really in the heat of earnings season. But
Mm-hmm.
first thing is, are there still trades to be done? Is there still work to be done in the markets? And so if there is, you do that. The team effort continues on after the close if that's the case. Got some really expert guidance coming through on those events when they happen, and something that you definitely want to take part of, or I definitely want to take a part of, when those opportunities come up. So if
Mm-hmm.
that's once that's done, or if that doesn't happen, then I'm going back through my trades for the day.
Mm-hmm.
I'm grabbing screenshots of my charts and my executions. I'm writing my thoughts. I'm actually transitioning to doing a video review each day of, okay, here's what we saw in the markets. What did we meet expectations? Did the market move in the way that I thought it was going to move, or did something surprising happen? And what impact did that have on my trading results, my game plans? Did I need to make adjustments along the way? And how's it set us up for tomorrow? And then once that's done, entering a few more details in kind of a more statistical trade journal, if you will, so you can keep track of things like win rate, um, win percentage, profit factor, all
Mm-hmm.
those kinds of things. And then it's another trip through the charts and see, okay, where's the close? A couple times a week on Mondays and Thursdays, I've got to put out an article that
Mm-hmm.
I write a market update twice a week. That takes some time to get put together and throw some charts in that and get that put out. And then that normally takes from around somewhere between 5:30, 6 o'clock, and then it's finally time to step away from the desk for a while and maybe get outside and get some fresh air, go for a run, take the dog for a walk, all that kind of stuff.
All right, let's go back to some audience questions. Eddie, this is a long one, so bear with me here. Eddie said, thank you for doing this. So he said, it looks like the 10-year yield has spooked the market heavily this week, and it is still heading higher each day, the 10-year. Since you mentioned hedging, but I doubt further out of the money covered calls would be enough to hedge against sharp delta downward movement on the underlying this week. He says he was forced to hedge in more protective puts around the 430 level and was kicking himself for not hedging in early when he saw the giant head and shoulder pattern forming early around 445. So he wants to say, may I ask more of your thoughts on hedging into last week's Fed event and how you approach moving forward from here and your key levels to look at specifically on SPY?
It's a great question, Eddie. Thank you for. I'm glad to be here. Thank you for being here to listen and send your questions in. I don't do a lot of hedging. My hedge normally is going to cash. That's something I wasn't able to do for a long time, dealing with client money, and I can't tell you that for me, the ability to get very small or even be flat overnight is a huge relief and breath of fresh air. So if I'm not sure about things, usually I'm going to close a position. Now, that's not the case for everybody. Other people have different tax implications, different objectives, all that kind of stuff. So, that's my style. If your style is to hedge, if maybe you've got a longer term portfolio or whatever your reason is, I think you're asking the right questions, and I encourage you to learn more about it. I'm not the guy to answer those questions, but I do think it's worthwhile. Tom Basso, who I'm sure you're familiar with, as one of the first market wizards. He's very generous with his thoughts on the market and his some of his practices behind putting hedges on his portfolio. Not that it's necessarily applicable to your situation, but I think that's a great resource. If you look at his website, maybe you learn a few things about how he applies hedges systematically. There's a number of different ways to go about it, and plenty of resources out there. So I'm sorry I don't have more direct information for you, but I think you're barking up the right tree. Protective puts, options. Old Tommy Dorsey used to always say that his options give you options, and so selling a covered call or buying a protective put on a position you really don't want to liquidate. Learn all that stuff. Figure out how you can utilize that, and then just remember that ultimately hedging is an insurance policy, and it's going to cost money. They're not all going to work, and you're going to have a cost if you do it systematically over time. It's going to erode your portfolio performance to some extent, and then when it pays off, hopefully it covers that cost and saves you a lot of money on the downside or whatever it is you're trying to hedge against. So, I don't know. Take a look and keep digging into it.
The other part of his question was if you had any key levels to look at specifically on SPY.
On SPY?
Mm-hmm.
Yeah. Great. I just put this on Twitter earlier. I think and I'm not the only one. A lot of really smart chartists and analysts have been sharing this. If you're looking at SPY specifically, 417.44 is a pivot level that I have on my chart dating back to early in May of last year, or earlier last year in May. That corresponds pretty closely with the 4,200 breakout level on SPX that everybody was watching, myself included, for a long time earlier this year. So that's another key level of interest. There is the 200-day moving average is right near that. It's just over that pivot level right now. And so two scenarios that I think are most likely here. Either one, this hammer pattern is confirmed tomorrow, and we get a relief rally, or maybe something more sustainable that takes us, maybe the end of the year rally starts right now. I don't know. Time will tell. If it keeps going up, then that's great. But if not, if we start to turn around and go lower, I think 417 to 418 is that's going to be a key area for SPY. That's going to be and looking at SPX correspondingly, if we get down to that 4,200 level and lose that, or that's going to send alarm bells for a lot of folks. And then the stories will start coming out, the opinions will start coming out and say, the bull market that never was, or whatever you want to call it. If we lose SPX 4,200, that's going to rattle folks and put people on much more on the defensive, I believe. So that's a really important area over the next coming weeks.
Eddie agrees. He said, "Yep, that's what I'm looking at, 4,200." So as you mentioned, it's not just you that's seeing this.
Yeah.
It's many analysts out there pinpointing those same levels. Okay, so with you as a chartered market technician and someone who looks at lots of charts every single
Mhm.
day. What are the things that stand out to you when you look at a chart versus just kind of your normal chart?
Well, I'm going to, okay, so the first thing I'm going to look at is just the overall trend, and that can be judged in a couple of ways. Just the what's the general direction of? I use candlestick charts. You can use a line chart. You can use whatever kind of chart you like. That's probably the most common in what I use. And which way is price going? Are there important pivot levels or potential support and resistance levels nearby? Is there potential, if we're down or whichever direction we're moving, is there
Mm-hmm.
is there something that could pose a problem and reverse prices? Where are we in relation to the shorter and medium and long-term moving averages? If we're above the 8 and 21 day, then the trend is probably pretty strong, and we're going to look for that to continue. I like to use lots of different time frames, as I mentioned before,
Mm-hmm.
using the 30-minute chart and adding an anchored VWAP, volume weighted average price,
Mm-hmm.
and a 5-day moving average to those is something that I've been relying on much more extensively lately. That's a trick I picked up from Brian Shannon, who wrote the book on using the anchored volume weighted average price. And I
Mm-hmm.
find those tools to be very useful for my style of trading. And so all that is there. And then finally, is there a pattern? Is there a bull flag? Is there a hammer? Is there a head and shoulders? All that, and those things can be very subjective. We don't always see the same patterns as the next guy might see or the next gal might see, and so those are, um, maybe not. That's why they're kind of in third place, not first place. But all of those things are, those are the kinds of things I'm going to be focused on first. Is there anything in those categories that jumps out at me?
Hmm. All right. Ryan said thanks for that SPY pivot at 417.44 and asked if you have a related pivot on the Qs.
The Qs are a little different. We never, like it went up so strong that anybody with a chart was looking at spot SPX 4200 and watching it try to break out and fail and
Mm-hmm.
try to break out and fail, and so on and so forth. The Qs were a little different. So, looking the kind of the corresponding area for the time frame was around 313 to 315.
Mm-hmm.
And so now the funny thing about that, it's well below the 200-day moving average now for Qs. And
Mm-hmm.
so don't know that a retest, if we get back down to there, then that's, what's that? That's going to be like
It's a big
almost
drop.
20% off. It's
Yeah.
almost bear market territory by definition. So, we've got a lot of other things to look at before that, but that's, answer your question, that's kind of where Q was while SPX was and Spine was doing its thing. Before that happens, got a little bit of a spot at probably 346.51. Um, that's a bit of a pivot area. There's a bit of a range there, 345 to 354 or so, back in June, May and June of this year. Actually 345 to more like 357. So we're back in that range now.
Mm-hmm.
Do we come back out of the range quickly to the upside? If not, if we chop around and go lower, then 346.50 is that's a general area that it's not that one pivot point on that day has so much importance, but that's just a general area to watch and kind of look at, if we handle that, fine. And if not, then we're looking down to, 338, 329, some of those other areas on the Qs.
All right. For our audience, we're coming up on the end here. So, kind of my last call for questions to submit any more that you have. It's been a great discussion so far. So, Andy, I want you to tell me about the best trade you've had this week so far. If not any in the past 3 days, you can kind of expand to over the past, 7 back to
Sure.
last Wednesday, maybe. And what made it go well?
All right, I'm going to give you two, and one of them I already mentioned. That the Q
Mm-hmm.
coming into that 354.71 yesterday, and then
Mm-hmm.
getting a bit of a bounce. That was a really nice, quick trade that was well broadcast. At least for us, that's something we watched, for a long time, and it came. It didn't hit the level there perfectly, but you know, that pivot low yesterday morning was 354.63. So you're within a dime. That's things don't always work out that cleanly. So when they do, that's nice. The
Mm-hmm.
other one was as another reversal trade that a little different was ELF, Elf Beauty. That popped up on my screens Monday evening as with some potential reversal indicators there. And on Tuesday morning, you know, the Qs are kind of doing their thing and going up and coming back down and chopping around a little bit. And I happened to notice that while that was happening, Elf wasn't really doing anything. It was holding up very well, showing good relative strength. And I thought, okay, I already had the daily set up there. Now it's showing good strength here so far early in the morning. So I was able to take a position in that, and it went on and ran, you know, very well. And I was able to take nice profits going up into the close yesterday. Then, you know, they say it's better to be lucky than good. Bit of
Mm-hmm.
an upgrade and some analyst news this morning. Got, I think, a buy initiation from somebody and maybe a price target upgrade. And so there was a nice gap up at the open, and I was able to close the rest and get out of that for a quick turnaround and some cash flows. So that was, you know, it was another nice trade to have on the books this week.
All right. And then on the flip side of that, talk about the worst trade you've had this week and what went wrong.
Flip side of that is a similar situation in 3M. It
Okay.
had it had a very similar setup to ELF. Some of the
Mm-hmm.
indicators that I watched were aligning and showing potential for reversal there, and had a bit of a pattern on the 30-minute chart. And so when it opened yesterday, it's not that it's a terrible trade; it just wasn't a profitable trade.
Mm-hmm.
So I had a game plan. It hit my triggers. I took the trade, and I got stopped out for a loss. And
Mm-hmm.
you know that happens. So that's what I'm gonna give you for a terrible, you know, a bad trade.
Mm-hmm.
Even though in my book I don't really consider that a bad trade. I didn't make a mistake. I didn't,
Right.
you know, it just happens. And you know, in this game, that's going to happen probably 50-60% of the time,
Mm-hmm.
depending on your win rate. There's you're going to have a lot of losers, and that happens. So
For for you personally, do you operate with kind of a set percentage stop loss, or are you setting your stops on each stock based on recent performance of that stock, where you think it could go, the kind of individually?
that's a great question, and so generally speaking, yes, I've got an idea in mind. If I'm going to risk X percentage of capital or buying power or whatever on a position. Okay,
Mm-hmm.
now from there, you're gonna size the position according to that, but the stop has to go in a technical area that you know that is sensible. I
Mm-hmm.
don't just, you know, I'm not going to say, okay, I'm risking $1,000. I'm going to place my stop here. You got to find a spot on the chart. Where is the pattern? Where's the setup? Where is the trade negated? And what's the distance, the space risk there from entry price to potential stop out price, and then size the position accordingly. And sometimes I'll have a hard stop in the system, you know,
Yeah, that's gonna be
just
my
a
next
mechanical
question.
stop
Are you
order.
using hard stops or are you using mental stops? So you right
It
into it.
depends.
Yeah.
Sometimes yes, and sometimes no. If it's something I'm being very active in, you know, there's another
Mm-hmm.
thing is you know, we look at things as having maybe one entry and a handful of exits as you scale out, but scaling in is also part of the process too.
Mm-hmm.
So you know, when you've got a couple of different entries, you're kind of scaling in or scaling out. Maybe you're trading around the core position, that kind of thing. It doesn't always make sense to have a mechanical stop in the system because, you know, if it's a swing trade, and let me back up for this 3M trade. Yes, I had a stop in the system. It got triggered. I'm out.
Mm-hmm.
When, you know, on the bigger picture there, you know, if you've got a swing position that you're kind of trading around, you know, you may not want to get stopped out of the whole swing. You're just looking at controlling the risk on the shares that you've added that day, so on and so forth. So anyway, probably getting too far in the weeds, but that's, you know, there's a couple different ways to go about that, and I do it in several different ways.
All right. So as we head into the final two trading days of this week, final two trading days of the month, final two trading days of the quarter, uh, what is your strategy? What are you looking for over the next 2 days?
More of what I mentioned earlier. You know, the main focus right now is going to be looking at these daily hammers on SPY and QQQ. that's an encouraging reversal there intraday. We're not out of the
Mm-hmm.
woods. It doesn't mean we're going straight back up. So from here, the thing that I'm going to watch over the next 2 days, I mentioned a 30-minute chart. I've shared them on Twitter. Look me up there, and you can see exactly what I'm talking about. 30-minute chart on SPY. The pink line is the week to date anchored volume weighted average price.
Mm-hmm.
That's job number one. If we're going to go up, if this move is going to continue, we've got to get above and stay above that anchored VWAP there. We tried it once this afternoon and got rejected pretty quickly. So if that happens, if we get above that, and to tomorrow to confirm the candle pattern from a technical standpoint, we've got to see price action above today's high. That would be the signal that confirms the pattern. Again, it doesn't mean we're going straight up. It just means that's the pattern, and you can assign a probability there based on experience. Is this something you want to pay attention to or not? For me, it is something I want to pay attention to, and then I will look next at pivot areas and the 5-day moving average, which is on my 30-minute chart. That's the blue line coming down there. We're going to have a bit of a pivot level around 429.18 on SPYs. That's kind of where things roughly bottomed out on Monday, and that was the opening price on Tuesday before things kind of went lower there. So that's a bit of a pivot level, and then the 5-day from there, and then you just continue to watch the process. If we're still going up, okay, what's the next level? What's the next pivot? What's the next moving average? What's the next potential resistance? Do we get there? How do we handle it? And just kind of watch that back and forth pattern and see what happens.
All right. Andy Moss, thank you so much for joining me for this event today. It was really great discussion. For everyone still with us, I did put in the comments Andy's Twitter handle. That's at Andy 2_Moss, correct? So
that's
Andy __Moss. So you can find him on Twitter. And as someone who follows him on Twitter, he posts lots of charts all day long to go alongside with David Prince's commentary on Twitter as well. He posts charts to support a lot of that for David as well. So it's good follow, great follow. Again, thank you, Andy, for joining me for this today. For the audience, we will not be back next week. I am taking a vacation, so we will have no conversations with the Pro Trader next Wednesday, but we will be back Wednesday, October 11th. The registration page for that event is already up on the T3 Trading Group LinkedIn page, so please sign up for that. See you back here, everyone, in 2 weeks. And thank you again, Andy, for joining me today. Hope you have a great rest of your night.
Greta, thanks for having me. It's been enjoyable. I'm always happy to be here. It's a nice conversation. If you're looking for me on Twitter or anywhere else, Andrew Moss CMT in Google will take you to most of the places where I'm active. So look me up there. And thanks for having me. Have a great vacation.
Thank you. And you have a great night.
All right. Take care.